The mortgage pre-approval process explained. What lenders actually look for in 2026. Hi, I'm David Hittle, doing business as Shop Kentucky Homes LLC, a real estate specialist here in Kentucky with United Real Estate Louisville. I help buyers make smart, confident home decisions without the hype or the pressure. And today, I want to demystify one of the most intimidating and misunderstood steps in the home buying process, the mortgage pre-approval. Specifically, what lenders actually look for in 2026 and how to go into this step prepared instead of stressed. If you've never been pre-approved for a mortgage before, it can feel like this: mysterious, scary financial interrogation. People think they're going to judge my spending. They're going to dig into every bad decision I've ever made. They're going to tell me I'm not ready and just crush my dreams. And because of that fear, a lot of buyers delay this step for months or even years unnecessarily. So today, I'm going to walk you through exactly what a pre-approval really is, what lenders actually care about in 2026, what documents you'll need, and the biggest mistakes that I see buyers make that sabotage their approval. So let's get into it. First off, what a pre-approval actually is. Let's start with the basics. A mortgage pre-approval is not just a casual estimate. It's a conditional commitment from a lender saying, based on the information that you have given us and what we've verified so far, this is the loan amount that we are willing to lend you. It's very different from a pre-qualification. A pre-qualification is basically someone glancing at your income and credit score and saying, yeah, you might be able to afford around X. A pre-approval means they've actually reviewed documents, they've pulled your credit, they've run your numbers through an underwriting system, and in competitive markets, including parts of the Louisville area, a real pre-approval letter is often the difference between winning a home and losing a home. Now, here are the 4 things that lenders care about most. In 2026, lenders still care about the same 4 core things as they have forever: income, credit, debt, and assets. That's it. Not your personality, not your job title, not how badly you want the house, just those 4 things. Income is more boring than you think. Lenders are not trying to make your life hard. They just want to know 2 things. How much money do you make, and how stable is that money? For most buyers, this means your last 2 years of W-2s, your most recent pay stubs, and sometimes your tax returns. If you are self-employed or commission-based, they'll usually look at a 2-year average of your income. And here's something that surprises people. Getting a raise right before applying usually doesn't help much, because lenders want a history, not a spike. On the credit field, it's not just the score. Your credit score does matter, but it's not the only thing that lenders look at. They also care about your recent payment history. Whether you've had any late payments in the last 12 months, whether there have been collections or charge-offs, and how much of your available credit you are using. I have personally seen buyers with a 700 score get denied because they had high credit card balances. And I've seen buyers with 620 scores get approved because everything else looked clean and stable. So when people ask, what credit score do I need to get pre-approved? The real answer, it depends on your whole financial picture. Debt is the silent deal killer. This is where most buyers do get blindsided. Lenders don't just look at how much money you make. They look at how much of that money is already spoken for, and this is called your debt-to-income ratio. They add up your car payments, your student loan payments, your credit card payments, your personal loans, and any other minimum monthly obligations. They then compare that to your gross monthly income. If that ratio is too high, it doesn't matter how good your credit score is. This is why two buyers with the same income can get approved for widely different loan amounts. Assets, not just for the down payment. Assets just means your money. What's in your checking account? What's in your savings account? What's in retirement accounts? Are you getting any gift funds? Lenders care about assets for 3 reasons. They want to know, do you have enough for your down payment, for your closing costs, for your reserves, meaning how much money you have left over after closing. In 2026, many lenders want to see that you won't be completely broke after buying the house, which is, honestly, reasonable. So what documents you will need? Here's what most buyers will be asked for. Your last 2 years of W-2s, your last 2 pay stubs, your last 2 months of bank statements, a photo ID, and permission to pull your credit. That's it. It's annoying, but it's not scary. Now, here are the biggest pre-approval mistakes. These are the mistakes that I see all the time, and they are huge. Applying before you are emotionally ready and then ghosting the lender. Opening new credit during the process to go buy furniture, cars, or open credit cards. Moving large amounts of money between accounts without documentation. Changing jobs right before or during the approval process. All 4 of these create unnecessary problems. So here's what I tell buyers in Louisville. Here's my honest advice, and I give it to buyers here in the Louisville area all the time. Talk to a lender earlier than you think you need to. Even if you're 6 or 12 months away from buying, a good lender can tell you exactly where you stand today, exactly what you need to fix, exactly how long it might take, and exactly how much house you should be shopping for. That turns the entire process from stressful to strategic. Now, a quick pause for a second. If you are thinking about buying a home in Kentucky and you want clear, honest guidance like I'm providing you now, instead of the confusing internet advice you see, hit that like button on this video and subscribe to my channel. I put out simple, real-world real estate guidance every other day to help buyers make smarter long-term decisions. Now here's the final reality check. So what is the mortgage pre-approval process really like in 2026? For 1, it's not scary. For 2, it's not judgmental. And for 3, it's not something that you should avoid. It is just a financial planning step, and it's one of the smartest things you can do early in the home buying process. So if you're in the Louisville or surrounding Kentucky area or planning to relocate here, and you want help connecting with a great local lender or figuring out your real buying power right now, my contact information is in the description below. I am David Hittle. I am your real estate specialist. I'm doing business as Shop Kentucky Homes LLC with United Real Estate Louisville. And if you found this helpful, please make sure you like it, subscribe, and tune in for my next video where I break down exactly how to win a home in today's competitive market.